Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like our 21 SPY and ES mean reversion systems you see here, our newer KISS trend following systems, and soon I'll be launching high performance versions of those, which I'll be doing a video on, but they're pretty amazing. Can't wait to show you. And again, it's been about a week since I did a YouTube video. If you want more frequent updates, consider subscribing to us. We're very reasonable in prices, $50 a month. We provide 5 detailed newsletters per week, dozens of trade ideas, and of course, trade alerts to our mechanical trading systems, and we have an excellent community. So consider joining us. All right, let's go and get started. This is our back-end recorder for our newsletter website, and it's October 31st, Halloween. So let's get this puppy started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Tuesday, October 31st, Halloween newsletter. Halloween was actually last night for our kids in our neighborhood. We had a big party. I'll show you guys some pictures once I get those updated or uploaded. Anyway, this is the Tuesday newsletter. Normally Steve does them on Tuesday. I switched because of our big Halloween party last night. This newsletter is divided into 6 major sections. Same general theme as we discussed. The first thing I'm going to discuss before we get into the general market is our open mean reversion system on the RSI oversold system, which is long a first entry on both SPY and ES. It entered yesterday, and that's up nicely with today's move. We'll follow up with the general market indexes, look at some indicators, sectors, commodities, precious metals, US dollar, and trade ideas. I added a handful of new setups tonight. Some of them are pretty nice looking, so make sure to take a look at those. And as far as the market, as you know, the market over the weekend, it came in to the weekend extremely oversold, very high bearish sentiment. We discussed some technical indicators such as the McClellan oscillators had some positive divergence. Moving average ribbons were very wide. So we were looking for some sort of oversold bounce, and we've got that the last 2 days. The market was up about 1% yesterday, the major indexes. Today, the major indexes are up about 0.5%. Okay, so we'd had a nice follow through. Now, what we favor right now is maybe if we get a pullback here, we're favoring a higher low than another move up. Okay. Now it remains to be seen, is this rally ultimately some sort of wave 4 of a leading diagonal that will then come down again? Or have we put in a nice low and we've started the end of the year rally? We'll see. And as far as other things, we have the FOMC meeting on Wednesday, tomorrow. Apple reports on Thursday. All right. So that's some big items. Okay, let's go and get started with the rest of this update. So the first image before we get into the general market analysis, these 4 charts, these are the mean reversion systems that went long yesterday. There's actually only 2 of these. The RSI oversold system went long on SPY, a first entry you could see here. We're up today, and it went long on the ES futures. We typically trade MES futures, the micro contract. Now with today's move, the systems are not looking to exit yet. But you're wondering, why is there 4 charts here? Well, if you recall, the last time these mean reversion systems went long several weeks ago in early October, we had nice winning trades here. But what happened is after the mean reversion move occurred, a trend hold condition occurred where the systems were looking to catch a bigger trade, and that ended up not working out to our favor. Then ended up holding the trades longer, gave up profits that were there on the SPY, and on ES it gave a lot of that back too. All right. So on the right side here, I have the trend hold conditions turned off, and you can see they were nice winning trades. Now, again, we're not going to get rid of the trend hold condition because in the past that has caught some monster trades. It generally works out. Again, not every trade works out, but what we're going to do in the future, and I've already discussed this, is whenever we get our mean reversion move, we're going to take half off, 50% off. And then we'll keep the other 50% to the trend hold condition. Okay, I think that makes the most sense because A, we still have something on the table for times when the mean reversion systems catch big trending moves. But if it's a time like last time, we will have locked in half the gains, so that even if the final trade closes out flat or slightly down, we actually make money because we locked in half gains on the first, mean reversion move. The systems are mean reversion systems at their heart, so it only makes sense to take something off once that mean reversion move occurs. Okay, so I hope that's clear. But again, we have two open trades. So the same system on SPY and ES. Okay, once these look to exit, I'll let you know via trade notification email. Next, let's go and get back to the general market. So image number 3 shows the index sector table, what transpired today and this week. So today the major indexes, the S&P was up 0.65%, Nasdaq up about 0.5%. For the week so far, up nice gains, S&P up 1.9%, S&P 1.6%, the Dow up almost 2%. As far as the major market sectors today, the 21 sectors, only 3 were slightly down. So 18 sectors were up, and the sectors that were down less than a percentage point. For the week, out of the 21 sectors, only 2 were slightly down. So a nice start for the week. Currencies, now despite the market still had an okay day despite the fact the dollar was up 0.6% today. Bitcoin had an awesome last week. Right now it's simply consolidating that move. Commodities here, kind of a mixed bag. The general index, DBC, was down 0.4%, down 2% for the week. Again, a lot of that was attributed to crude oil, which was down 1.5% today and down 5.3% for the week. So that's a big move for that. Natural gas had a good day. Copper down 1/4. The ags were mixed. Some were up, some were down. Precious metals were all down. Not surprising. The stocks have been leading down, and you can see that even today. GDX down 2.6% versus gold down only 0.55%. All right. So we're having a nice pullback there. I am looking, though, for this pullback to form a higher low. So I welcome this pullback. By the way, I have a killer KISS system for the GDX, which I will be showing. And as far as the bonds, high yield corporate was up a little bit today, 0.25%. 10-year was flat. Next. Item number 4 shows the economic news calendar. Tomorrow, Wednesday, remember we have the FOMC. And an Apple reports on Thursday. We have initial jobless claims, factory orders, etc. on that day. And of course, being a new month, November, non-farm job payroll report on Friday. That's a big one. All right, let's go ahead and move on to the charts, index charts. So item number 5 shows a snapshot of the 5 key major indexes with Bollinger Bands. So again, you can see coming into the weekend, last Friday, we were very oversold. The indexes had closed below their lower Bollinger Bands. The Dow, the S&P was below their 2 days in a row consecutively. So we were quite oversold, a lot of bearish sentiment, and so far this week we bounced up a little bit. Next. Chart 6, here's a daily view of the S&P. Again, nice correction from that late July highs. Remember, we became bearish there. We are looking for a correction pullback over the next couple months, and we've definitely gotten that. And it lasted into late October so far. We're now going to be entering November tomorrow. One way to look at this perhaps is the leading diagonal, which could rally maybe even up to the 4,300 area, this downtrend line here, then come down again. Or maybe we got a major low in here. We'll see, because of seasonality. Next. Chart 7, here's the daily SPY chart. So nice bounce the last couple of days. Yesterday had a nice long-legged doji candlestick. Remember the RSI oversold, mean reversion system triggered, little pullback, follow through today. So a mean reversion move would be back at least to this 9 EMA. Notice you have the 200-day moving average up here. So that's a big level. This is a supply zone, and this is an area where it could start to struggle a bit. Next. Chart 8, here's the monthly view of the S&P. Again, this is my bigger picture view. So as you know, we had that awesome bull market from the March 2009 lows. and we completed the end of that bull market in late 2021. We had a nice bear market in 2022. The thing is, was the big rally in 2000 this year, was that a new bull market, or was that a wave B of a larger bear market? Okay, like in bear markets generally unfold in these large ABC type patterns. If that's the case, over time we could see it come down to these lower levels, the lower channel. Definitely, fundamentals and deteriorating fundamentals, interest rates, other things, the sheer amount of debt out there would definitely, could favor that. But we'll see. That's just something to consider that's in the back of my mind longer term. Next, item number, image number 9. Here's the daily spot S&P KISS trend system. Again, it's been flat here since September. You had a nice winning trade there early in the year from March until beginning of August. Had a little whipsaw trade there in September. Got stopped out. And that bounce into early October stalled right at that ATR. Perfect resistance in the 50-day moving average. We're below the 200-day moving average now. Again, coming into the weekend, we were very oversold. And you can see that on the moving average ribbon. You see how wide the moving average ribbon is? So that's another good way to use these moving averages when they pinch, that tells you something. And when they get too wide, you're generally due for at least a mean reversion move. And that's what we're getting so far the last couple days. Next, image number 10, these 4 time frames we like to follow from these KISS charts. So here's the daily up here. So also coming into Friday, it's closed. We had a DeMark 9 and a support cycle. That's the cyan dots there. Stretched to move an average ribbon. So we've had a logical bounce here. Now the ATR on all these time frames is resistance. We're right, maybe slightly over on the 78-minute here. We're just below it on the 130-minute. And again, you can see how wide those moving average ribbons were. Next, chart 11. Here's a 2-hour chart of the S&P. Again, just in this stair-step down pattern, bouncing up a bit. Again, you got a resistance area right in this zone here, 42.20 to 42.60. Next, chart 12. Here's a 60-minute view. Again, nice bounce so far. You do have a supply zone coming in up around this area. Chart 13. Here's a 30-minute chart. On the weekend, we showed this steep channel. We started breaking that on Monday. Nice follow through. Now this rally off the lows is the largest rally from this downtrend here. Now it's obviously, I'm not talking about from back here because this rally here was much larger, but with respect to this 43.93 high, this is the largest move. So what I favor is, and we also had a structure break. We took out the last lower high here. So I'm looking maybe if we get a pullback here to form a higher low and then move up again. Okay, so that's what I favor. See if that pans out. Chart 14, here's a 15-minute view, and this also has the volume profile on it. You can see we had a nice wedge coming into Monday, gap up, so that's played out. We've moved up. The 38% fib from that 43.93 high is up there at 42.14 roughly. 61.8 fib is up there at 42.83. Next, chart 15. Here's a 15-minute view, and this just shows you a little simple education. A lot of times we talk about a break in structure, and what we mean by a break in structure is if you're downtrending or uptrending, here you were downtrending, you have these series of lower highs. You see this? Lower high, lower high, lower high. None of these rallies could break the previous lower highs, all right? Well, Monday's initial gap up broke that last lower high, so that was a bullish break in structure. When you get that, then you look for a higher low pullback, and we got that. Okay, we've been chopping our way higher. So hopefully that's a simple education for you on that method. Next, moving on to the triple Qs, chart 16. Here's the triple Qs. Again, they've been stronger, much stronger than the S&P because of those, basically those big 7 stocks that are such huge weightings to this. Microsoft and Nvidia, Apple, etc. Anyway, this didn't get quite to its 200-day moving average. That does bother me. It got pretty close. I still think possible we could at least test that over time after this bounce is done, maybe. Whenever we get close to a major moving average like that, it always bothers me if we don't touch it. Usually we end up eventually. But otherwise, we've bounced. We're just below the 90 EMA. That's your first resistance. This is a big supplies or demand zone down here, big support area. Next, Jarbber 17. Here's the daily KISS trend system for the triple Qs. It went long today. Okay, so those of you who are have set your alerts for the KISS systems, you should have gotten an email about that sometime after the close. So the stop basically is right at the low of Friday's lows. Okay, next, Jarbber 18. Here's the 4 time frames we like to follow. Again, very similar look to the S&P. We had a DeMark 9 coming into Friday. Support cycle, wide moving average ribbon, and we've been bouncing back. We're below the ATR in these smaller time frames, which is your resistance. Next, Jarbber 19. Here's the triple Q's 2-hour review. Little bounce so far. No real MACD divergence there. So, this still ultimately could come back down again. There's still this unfilled open gap. And remember, this didn't get below the 200-day moving average on a daily chart. Jarbber 20, here's a 60-minute chart. So slight poke out of this little steep channel. The rally off the lows here, $8.90, slightly higher than that last rally. So a slight symmetry break with respect to the 373.74 high. Next, Jarbber 21, here's a 15-minute view. So I should have updated this chart. This is from Steve, extending these trend lines out. So we're chopping higher here, possibly in a wave C or a wave 3 would be the bullish view. Okay. And that does it for the major indexes. I don't have IWM in here tonight. As you know, that has been the weakest index by far this year because it doesn't have the support of those big 7 big cap stocks like Apple and Nvidia, Microsoft, Meta, etc. It's also bounced a little bit over the last couple days. Next, let's move on, look at some of these custom indicators. Here's the VIX with the Bollinger Bands. So nice sell-off in the VIX today. Little bounce up in the market the last couple days. Next, Jarbber 23. Here's some of these McClellan oscillators we showed on the weekend. So this is the McClellan for the NYSE. You had a positive divergence here with respect to price. And usually those can produce nice little trade bottoms. And so far, we've got a bounce this week. Jarbber 24, here's the McClellan oscillator for the S&P. You had the same thing. You had a little positive divergence there with respect to that last low. Nice bounce up so far this week. Jarbber 25, here's the NYSI 9 EMA crossover system. Remember, this gave an excellent sell signal in early August back here. Really nice buy and sell signals over the last year, as you can see. They never catch the top and bottoms, but maybe 80% of the move. And using this confirmation method, where you need to take out a high or a low of a candle for a long or a short, that filtered out this last little whipsaw here where it just slightly crossed up because you didn't take out that high. But you can see, despite the move up, this hasn't given a buy signal yet. But I think the next signal on this could be a decent one. I think it's ready. It's been downtrending long enough here, so this is something to watch in the future. Jarbber 26, here's the weekly version with my trigger system. So the long trigger would need to take out the high of last week's candle. Obviously nowhere close to that yet. Nice sell signal back in early August, obviously. Next, Jarbber 27, here's a 60-minute chart of the S&P versus high-yield corporate. The S&P tends to follow high-yield corporate, okay? And when divergences set up, like you see here, where the S&P made a higher high, but high-yield corporate made a lower high, that was a bearish warning in mid-October, which played out. Now, what you had developed late last week was a positive divergence where high-yield corporate had a higher low, but the S&P had a lower low, and so now it's producing a bounce. Otherwise, the big spike here on this candle on high yield corporate today, that's obviously a bad tick. There's no way it went up to, 75, 60, whatever that spike is. Hopefully stock charts removes that. Driver 28, here's high yield corporate on the daily. Again, it was up today, but off the highs. Next, driver 29, here's the 10-year treasury yield. Was essentially flat today. It did gap down, but bounced off its 20-day moving average. That's your next big support, guys. It really needs to lose that for us to see a pullback in rates. That would obviously help the market if this could break down, but this could theoretically rally up again, which is definitely a concern. Driver 30, here's TLT 20-year bonds. Obviously moves opposite of the 10-year. Still in this overall parabolic type downtrend. Driver 31, this shows you some of the major sectors: transports, banks, financials. Again, everything's bounced a little bit this week. I'm not going to go over all the sectors tonight. Steve covered those on the weekend. Here's the transports. We'll look at that. IYT, again, it was extremely oversold coming into this week. It was below its lower Bollinger Bands for what, like 1, 2, 3, 4, 5 days, consecutive days. That's pretty extreme. So far we've had a mean reversion bounce back to, not quite back to the 9 EMA. No divergence down here. So again, that's not a good bottoming pattern. It was just oversold. Next, driver 33, here's XLE Energy. So far, and again, nice pullback from those recent highs. Still managing to stay above the 200-day moving average. You could have a potential long trigger over this high. By the way, I'm making a KISS version of the high performance version for the XLE Energy. Driver 34, here's a 60-minute view of XLE. Got a nice tight coil here, which you could trigger from on a long if this breaks to the upside. Nice chart. Actually, this is a 15-minute, not a 60-minute. Next, moving on to commodities, driver 35, here's DBC. Again, so far just been chopping around for the last couple weeks. It's still nicely above its 200-day moving average. Driver 36, crude oil, nice pullback from those late September highs. Steve has a couple variations in here. One view that I had labeled could be an A, B, C that we're working on. More bearish view would be a larger sell-off here in a 5-wave. Or when we put in the bottom, then you could move up again. There's various counts here, but right now I'm kind of favoring this wave C move. Next, driver 37, copper. Again, this big support zone was defended over the last week. Remember, it's been big support area for quite a while. Again, otherwise it's still below longer term resistance. We did get a break of the RSI trend line here, which could have been a buy trigger, or you could have bought this support, either one. Next, driver 38, here's uranium, URA, ETF. Nice pop today. It's possible that this is still wave B or that a low has been put in. We'll see. I like uranium long term. I love the monthly chart. I'm not showing that tonight, but we'll see. Next, driver 39, here's Bitcoin. Again, hell of a rally last week off the support area. Got very extended here. I don't have the moving average ribbon here, but you can see how overbought this got. And so right now it's simply consolidating some of those gains. Next, driver 40, US dollar was up today. Overall, no change in the pattern here. We'll see if this pops up to this next resistance zone or not. Next, moving on to precious metals, driver 41, gold down about 0.56% today, still above its 9 EMA. Remember, we put in a decent trade low back during early October. Good 200-point rally off that low. It is overbought here. Because the stocks are underperforming, they lead. I'm looking for a correction in the metal pullback. As long as it can hold above this trend line, I'm looking for a higher low and then another move up. So I welcome a pullback here. Driver 42, here's another chart of gold. This shows that ABC correction, which I favor putting in that major low there. So this one has the GDX GLD ratio, which you can see has been trending down, especially lately. The stocks tend to lead, right? So I think this is soon going to pull the metal down. I think you could probably short gold here and get a quick trade on it. Jarbor 43, here's gold on the weekly. Again, longer term, you had this tested this 2080, 2090 area 3 times. So far, we've had a 3-wave pullback this year to the 200-week moving average. We bounced off of it. I view that as a major low. I think this is eventually going to break out of this area in a big way. Jarbor 44, here's the monthly view. This is kind of what I'm favoring. Eventually, gold starts this wave 3 up that goes to new all-time highs. Jarbor 45, gold, silver, still overall in this kind of coil-like pattern. It's basically in the middle of it. Jarbor 46, GDX on the daily. Again, broke out of the channel a couple weeks ago. Nice pullback here. We'll see if this broken channel line acts as support. So I added fibs here. We're about 50% off the highs. 61.8% is 27.35. I'd like to at least see that hold. Again, you can see the GDX GLD ratio, how it's trending down. The stocks have been leading down. Jarbor 47, here's another chart with the moving average ribbon. Moving average ribbon's starting to pinch here now, so that's why it's an important area to watch. Jarbor 48, here's dust. That's the double inverse ETF for the miners. Remember, I gave this as a long idea last week because I was looking for a pullback in this sector. And if you bought it a week ago, it's had a nice pop. Jarbor 49, here's GDX on the 60-minute chart. So you can see, first off, had 5 waves down into early October with a wedge with positive MACD divergence. Nice rally from there into the supply zone, which was the area to take profits. You could see the GDX GLD ratio was trending up and then it started trending down. So that confirmed that sell signal in there and it continues to trend down. But a positive thing today is we filled this open gap. So that's good. And we're retraced about 50% of the move. 61.8% of the move is right here. So this is now an area to start watching for a reversal. Jarbor 50, here's the GDX KISS system, 78-minute version. You could see some of the trades it's done. Very nice trades. Took a nice long trade on October 6th. It got out last week, which was the excellent place to get out. It's currently flat. This is an example of one of those custom high-performance KISS systems. It blows away buy and hold. Next. Moving on to trade ideas, guys. So Jarbor 51, DGX was a long idea of mine last week with the resistance at 125.30. Played out beautifully, as you can see. Hope a few caught it. Now let's look at some new setups. Jarbor 52, gas, stealth gas. Kind of a cup and handle potential here, stopping at resistance. So one thing that we could see is this little pullback here, forms a handle and then pops out. So that's one to watch. Jarbor 53, AUMN, low price stock, the gold stock. It had a big pop in October all the way down, but it's lighter volume pullback at support. You could potentially buy this here with a very tight stop. Now I wouldn't marry this stock. It's obviously a piece of crap, but it could give you a trade perhaps. Jarbor 54, here's some new setups. MCRB, nice little base. Resistance is 160, 162. Nice volume coming into it. Jarbor 55, GDHG, long idea, basically a bull flag. Could pop out of here. Jarbor 56, RRC, potential breakout. One to watch here tomorrow. Jarbor 57, IDYA, clean resistance right here at 27.80. One to watch if it can break out of here for a long. Jarbor 58, NXE, another one to watch is a long. Nice volume coming into it. Resistance right here at 610. Jarbor 59, RPTX, the last one. Hell of a sell-off here. Look at this. Basically a mean reversion long. Get a little tight doji, kind of a small candle. Big volume today, probably news of some sort. I didn't look. but a long trigger could be over today's highs at the stop at the low. So for a mean reversion bounce back to the 90 EMA or a little bit higher. All right, guys, that'll do it. Let's see what happens tomorrow. Have a great evening. Take care.